In the modern world, you can enter a bank, deposit money, travel halfway across the planet, and retrieve that money no issues. But could you do this in the past? And with that, how did banks work back then? Now, banking hasn't changed all too much throughout European history, and as such, we're going to focus on the late medieval, early Renaissance period for two main reasons. One, Renaissance banks operated across borders in different states with different laws, and two, the Catholic Church expressly forbid the act of charging interest on loans, a practice known as usury, which is what we'll begin with. So, since a banker couldn't charge interest on a loan, how did they make profit and why bother loaning money out at all? Well, banking families like the Medicis weren't fools, and they managed to get around interest in two ways. The first was via late payment fines. Whilst you couldn't charge interest at, say, 10%, you could fine someone 10% of the total of the loan if they were late in their payments. If you were to, say, pay back a loan on time, you'd get no fines, but in return, you'd likely be blacklisted by every banking family in existence. And so, if you ever wanted another loan again, you'd need to pay it back late. The second way they got around interest was via currency conversion. You'd get out a loan which would be provided in one currency, and you'd then pay it back at a different currency at a different time, and thus at a different exchange rate. The bank would then pocket the difference. The exception to these rules were kings and the Pope, who just got the loan for free because please don't kill or excommunicate me. Now, as the process of taking out a loan suggests, you'd be taking out and paying back money in different places, meaning that these banks had multiple branches, as the Medicis did. So how did these banks confirm details and prevent fraud between the different branches? Why couldn't someone simply forge a note saying that they have an account and then run off with the money? Well, there were several checks and steps to verify information. As many of you will know, banks at this time were run by families, and members of these families would be sent to the bank's branches to run them. These branch managers would know each other quite well and importantly know each other's handwriting well too. The bank would then use their own trusted messengers who would travel as fast as they could to the numerous branches to update them on account information. Thus, it was possible for a person to deposit money in, say, Florence and withdraw it in Paris, for a fee that is. Now, all of this was very profitable, but this didn't stop most banks from going bust very quickly, and this was mostly down to warfare. Kings needed money for wars, and having a branch in a kingdom meant that you were obligated to lend money to the king if they needed it. And this led to kings taking advantage of banks. Since they had near absolute authority, they could and did simply refuse to pay the loan back. In fact, kings were often pressured by their own merchants and lords to do so, since this would then force a bank to default and close, meaning that it couldn't collect payments from anyone else. And so, that's an extremely simplified way of how medieval banking worked. Despite the lack of modern technology or the ability to charge interest, banks were extremely profitable. However, it was an extremely risky business too, and families were often taken down by kings as quickly